Hey traders, Tuesday 15th of September, day before the final FOMC meeting ahead of the US elections. What's going to take place? We're going to see dollar strength, we're going to see dollar weakness. Is the Fed going to disappoint? So in the meantime, potentially the moves could be a little bit erratic in the lead up to the Fed. Risk on, risk off. You know, at the end of the day, we don't know what's going to happen. We don't know how the market is positioning themselves. So what we have to do is just look at the charts and see what they tell us, and then trade according to our rules. Just looking at the dollar index, you know, we've been working and operating within this broadening pattern, and as the market's tested around the 93.6 area several times, and then we sit looking for break above 94 in order to confirm that dollar move. A break back below sort of 92.66, and we should see further downside towards the 91.50s and maybe even the 91 even handle. So in the meantime, I think it's basically a sit tight on this market. Now, if we just move over to something like sterling, which we're seeing has got external pressures with Brexit, furlough coming to the end of its program in October, which should see some significant rises in unemployment. Obviously not great for the UK economy, but what we're seeing, well, the market came up to test the highs at around 135, and while we were doing that, we formed a rising channel effectively. The market popped out, tested the highs, then came straight back in, and then we've seen that downward pressure to the 127.50 even handle, and right now we're putting in a bullish flag formation. Potentially we could see the market test that 1.3, but if we drop down the time frame, you'll see that the market is kind of stalling here at around 129.20. But if we do just sort of look at this, there's potential on the chart for a third touch. So what we might see is we might see the market come up, we see it come back down, correct, and have that third touch in and around the 1.3, which would give us a lovely rally to sell on, back down to 128s, and then potentially even further, depending on what the significance of Brexit and deal or no deal. So this is obviously going to be very heavily news driven, but please make sure that if you are trading this, you know, as long as the setup is there, you are using correct risk management technique. Therefore, even if there is significant Brexit news, positive or negative for your trade, you can only ever forfeit or lose the capital that you were prepared to risk. So never over leverage, never over risk. Just make sure you do understand how to calculate your risk, whether that's lot sizing or spread betting, you know, so that's something you've got to be very clear on. But watching a couple of things, as soon as we see a break of the counter trend line here from this bearish flag on the higher time frame, we should see significant further downside. But you know, those that are more aggressive can look for the 1.3 shorts based on a potential third touch of the bearish flag here that we're seeing. But on a smaller time frame, you'll see it as a rising channel, which then obviously if we look left, you'll see that comes into the start of this pattern here, and gives us a nice structure point to work from. Moving over to dollar yen, it's not a particular market that I would say I'm overly keen on in terms of trading, because you know, the dollar and yen are two markets that I'm potentially looking at buying. However, if we are going to see some yen strength here, that could pivot across and look for some really nice trading opportunities, say euro yen or CAD yen, Aussie yen, you know, looking to trade those risk currencies with the safe haven asset. So if we look at this market, we're predominantly forming a move to the downside. I would expect to see 105 tested based on what we're seeing here. We were operating in recent weeks between sort of 107s, 105s, quite a narrow range really, but it's not something that does move excessively unless there's periods of uncertainty where you do usually see the safe havens start to move quite aggressively. So as we look at this, you can see a short-term trend line has broken, therefore I'm expecting these lows to be tested. If we drop down the time frame, there was a lovely 1 hour trade here today, you know, but that could have been traded on other markets that weren't just against the dollar. So what we're looking at here is support being broken. We can see the 1 hour correction, a couple of rejections here, we came back to test, and then we're looking at basically as the market closed below here, you can set your risk above. You get basically your 2-to-1 down to 105s, an easy intraday trade, and you'd be looking at making this trade risk free as it currently stands right now if you took this trade. Looking at Kiwi, because we are anticipating the risk currencies to potentially take a little bit of a hit over the coming days based on what's going to happen with the Fed. Are they overvalued? Potentially. You know, we look at sentiment from commitment of traders and from seasonal analysis, and that leads us to believe that we will see a market decline in the risk currencies, and some potentially strengthening in sort of the USD and Japanese yen. So obviously that's looking for technical setups now to trade these, and we could see a really nice sort of ABCD pattern formation here. If we look at this impulse move into here, we've got our bearish correction being formed. Aggressive traders could look at trading short from here with stops above the highs and initial targets of sort of around 65.60. But intraday traders, you'd be looking for price to break support trend line, look for a correction, and then trade that back into support down here at 65.60. Next move, we'll look for when price finds some sort of consolidation, and then we can break through that. And if we look at this on a higher time frame, there's potential of an inverted head and shoulders on something like the weekly, and you see here's the left shoulder, the head's down here, looking for that market to potentially drop down in towards that 63 even handle. And then, you know, it's a matter of, right, where's sentiment? So seasonally, we'll be looking for longer term buys around on Kiwi and Aussie dollar, sort of end of November leading into December. So between that period, we're looking at that market to sell off. Final charts for us to look at will be Kiwi Swiss. So again, very similar. We can see long-term trend line here. The market is potentially rallying up into it before we get that next sell. Now, if we look at it on a 1 hour time frame, you can see that this market now has actually formed a lovely channel here, and then we've got a rising wedge. So before we actually take into account where this market's going to go, if we are going to see a sell-off first, we want to see a break of this support trend line here, and then there's an easy trade down towards the basically 6020. If the market is going to break up and we're going to see that weakness in the Swiss franc override potential weakness in the Kiwi, we could see a test of 6200 in that weekly trend line before we look for that seasonal bear period. Technically speaking, I'm only going to look to sell the Kiwi here on short side on a break of support. I don't really want to be trading it long. I would look for shorts from up here at 62. So my two options will be looking at intraday move, break here and sell into support, or price moves up, look for some consolidation, and then I'll look to sell that from the big move, from the big number 6200. Okay, that's it from me today, Mark Owen here at Trade and Train. If you did enjoy the analysis, please click like, share and subscribe. This way, anytime we post any updates, it'll come straight to your inbox. If there's any videos you would like us to produce, whether it's content, information about indicators, chart patterns, etc., please drop us an email or comment on the video below, and we'll happily put that video out for you. Have a great day, guys, and make sure you stay disciplined through FOMC tomorrow.